Hey guys, I wanted to go over this video with you because I was talking to a group that we have. We're starting our own real estate club. Like I've been talking about it for a while and put it off really because we were busy with Bell Capital. But I want to be able to help more people because some people are ready to invest or some people just want to learn more about it, whether they want to be an active investor or you might want to be a passive investor. You still need to know what to look for. So you guys have seen me talk about this. I was going over this with the group. Um, so I won't be long on this, but really like to share. So when we're looking at investments, when I'm looking at anything for Bell Capital for the fund, or when I was doing deals without the fund and just for myself, I'm always and we're talking about multifamily investing, right? As a passive investor or an active investor, here's what I'm looking for. Number one thing is always going to be cash flow. Reason why is because if the deal don't cash flow, it doesn't make a good deal for an investment for me, right? I mean, to each his own. I'm not a developer. I don't want to be a handyman or a fix-up guy. So we're looking at multifamily real estate. It has to already have cash flow coming in, positive cash flow after it pays expenses, after it pays the debt, then it has to pay me and my investors. That's the game, right? So passive income for a passive investor or positive cash flow if you're going to be an active investor because you got to pay your people. So that's number one. Number two, I always do my number after, but whatever. So it needs to have appreciation. 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 And there's different versions of that. So there's controlled appreciation is what I like to call it. You can force appreciation by going in, painting the outside, planting palm trees, resurfacing the parking lot in multifamily, and then slowly increasing the income and the rent. It could be rent and increase. It could be pet fees, late fees. You can have valet trash, access to amenities could cost more money, valet parking, things like that. But that is how you can control appreciation because it's based on the income of the property. You can force appreciation, which is raise the rents by doing something, or you can take gradual appreciation over time by raising the rents, natural inflation, right? Number three that we look at are the tax benefits. As an investment, could we get tax benefits? Could we get depreciation? If we exit the property and we've held the property for a long time, could we do a 1031 exchange? If we have investors, if you're a passive investor, you're going to get a K1. So we can pass those tax benefits off to you. So that means maybe the cash flow that you get, you may not pay taxes on the cash flow that you get because you get paper losses that get to flow through to you as an investor, or for you as an active investor, you're doing the deal. So then that way you might, the cash flow from your property you may not be paying taxes on that. I'm not going to go into the tax things for that. I have somebody for that. We're bringing somebody on our major player show to be able to talk about that more coming up. But these are the things that I look at. Number four, I look at is leverage. Can we get good leverage in a deal? Meaning like financing the debt. Like for real estate, for multifamily real estate, every $1 should buy you $3 to $4, but let's just go with three. So if you put in $1 million, that $1 million should buy you a $3 million deal or a $3 million. I'll move that back. So there you go. Or a $3 million position in a piece of real estate. But this is how you multiply money. This game right here is how people multiply millions of dollars. Right? You saw like, hey, 1 million buys you $3 million worth of real estate or a $3 million position. And when you exit that deal, that's what you're looking for, right? So when I talk about being able to multiply your money or multiply millions of dollars, how do you take your hard-earned money and convert it into a real asset, right? So we'll use the example because we've been looking at deals. We've been hunting really hard, man. It's January. Conference time is over. Everybody went to NMHC, which is a national multi-family housing, whatever. A bunch of brokers and lenders and people in the industry, all the major players get together in Vegas and they go over exactly what's going on and they kind of project what's going on for this year. They take a look at last year, they take a look at the debt market, who's playing, who's not playing, Fannie, Freddie, all the different people, and they go over what they think is going to happen. But that just happened. So it's what I've been talking about 2026, 2027 through 2029. Yeah, 2029. So, anyways, stick with me on this. So let's just say we're looking at a deal. Let's say we're looking at a $40 million deal. Boom. Uh, yeah, $40 million deal. And in this deal, let's just say, boom, Worst case scenario. I like worst case scenarios. Not that we're going to do this because usually we'll do 40% down on a deal and get 60% of the financing, but let's go 50%. Let's say on this deal, it was a great deal and you had to put down $20 million, but you knew that this property was, you're buying it for 40, and you're going to put down 20, but you know for a fact that let's say it's worth, I don't know, $50 million. So you get a $10 million equity spread on your purchase when you buy. So you're already up 10 mil. But let's just say this. So we're going to put down $20 million. Let's say 20 people get together and you guys put down, we all come together, we all collectively put down $1 million each. 20 people put down $1 million. Totally doable. I mean, you guys should be doing that anyways. You should think through having a million invested, right? So this $1 million, let's say on this deal, we know we're going to get 5% return on our money per year, right? This is our cash flow, right? On that, every year, this 20 million is going to make $1 million. And if we held that deal for 10 years, we're going to get $10 million. Right. $10 million. But this is just our cash flow saying that worst case scenario, that's the rents. We're collecting the rents, passive income, positive cash flow. We're going to make, in 10 years, we're going to make half of our money back. We're going to make 50% of our money back just in cash flow by doing nothing, right? That's not raising the rents. But you and I both know that that's crazy. If you think 10 years ago, were the rents where you live at now in your market, your city, whether it's San Diego, whether it's Hawaii, whether you live in Texas, whether you live, in California, whether you live in Florida, Washington, um, Vegas, Arizona, whatever, were the rents 10 years ago lower than they are today or higher? Right? And you guys know where I'm going with this. Rents typically double every 10 years. But let's just say they didn't. Let's just say we already know that it's almost impossible for rents to kind of stay the same. They're not going to go up every year, but every 10 years they kind of double. It may have like 1 year nothing, next year a little bit, the next year a little bit more, and then all of a sudden, bang, they spike, whether it's year five, seven, whatever. So let's just say this scenario, we got 5% on our money doing nothing. We made $10 million in 10 years, hypothetically. This is simple, simple math, back of napkin math. But let's say over this 10-year holding period on this specific deal, $40 million deal we bought, we put $20 million down. Let's say we increase the rents 5%, another 5% over time. That's another $1 million over this money that we got, right? Because this is an increase on the five. It was already doing five, but over time. And let's say we didn't get it a full 10 years. Let's say out of the 10 years, we only got it 5 of those years, right? So that's another $5 million in cash flow that we got, increased cash flow. So that's $15 million just in cash flow alone. That's a $15 million cash flow spread over 10 years. But remember, we only increased the rents 5%. We only captured 5% of that. We cut the 10 years back. We didn't get it all 10. We only got it 5. And then this one, our normal 5%, we're there, right? So that's $15 million that we've made just in cash flow in 10 years, right? The 5% plus another 5% increase out of the 5. So that's 15 million. $15 million. Boom, and just cash flow. And this is how deals work. I'm going over this because I wanted to show you guys how that money multiplies. Then later we took that same deal that we paid $40 million for, we put $20 million down. Technically, we didn't pay 40 million for the deal. Because if we bought a $40 million deal, but we put 20 million down and we got financing for the rest, how much did we actually pay for the real estate? 20 million. That's it. And we all came together, 20 people put $1 million down, and that's how that worked. But we got $15 million of our $20 million back in 10 years. So we're only in it for what, 5 million if we hadn't did anything. So let's say we're going to take that same $40 million deal, $40 million piece of real estate, and we turn around and we're going to sell it. But we're not going to sell it for 40 million. We're going to sell it for what? What do I always say? I want to double my money that I had. So I would have to turn around and sell that deal for 60 million. $60 million. This would be what we would sell for. So we would get our 20 million back that we already had in it. We made 15 million, plus we made another 20 million on that deal. That's what? 55 million. So we would have made $55 million on that deal because we got our 20 million back. We got 15 million in cash flow, plus we made another 20 million at the exit. That's if we sold it, right? That's what is that? 200, that's a 275% return on our money. That's 275% return on our money. On our money. This is how money multiplies, guys. right there. That's how that works, right? We put down 20 million, and we got 55 million back later. Now, better than that, what if we did this? That same $40 million deal, we went back to the lender, right? So we went back to the lender, $40 million. We bought $40 million. Our loan would have been paid down by now quite a bit because we've been in for 10 years. But let's say along the lines, we go back and I refinance, which is the target, is my big goal, pull out $20 million of this deal, right? So because again, what do we owe? We really owe, we bought it, this is what we bought it for. We had a loan for 20 million. We go back, we borrow against this 20 million because the value of that properties went up because we did what? We increased the value of the property by, controlled appreciation by raising the rents. Now we get a new loan for $40 million. I pay my investors back the $20 million, and you already kept the extra, what do we say? 15 million, because you still got your 15 million in cash flow. Everybody got their $1 million back, spread out over the 20 people. And now we have an infinite return, is what that's called. There's an infinite return, right? Because we have zero money left in the deal. And this $20 million that came back to us is a non-taxable event. It's non-taxable. Why? Because we went back, we refinanced the property, and we put new financing on the property for 40 million. And here's the deal. We still own the asset. We still own the asset. Why? Because of leverage. Good leverage. This is the key to all wealth. This is how wealth is made, guys. Boom. Wealth. I know that sounds all scribbly because I get all excited about this, but the point is this. When you understand how to multiply millions and millions of dollars, you want to get in this game, whether you want to do it yourself or you want to have somebody else, because this is a lot of work, guys. Let's not be confused. I said 10 years. A lot of people miss that. Now, we can refinance in 5, depending on the circumstances, right? We'd have to do good work on that deal. And, that's how this works. But where let's say you're a dentist or you're a doctor or you're a chiropractor and you have a few offices, can you actually take your hard-earned $1 million and double or triple it in a relatively short amount of time doing zero work, knowing what you do now? Maybe, but you don't need two businesses. That's the whole point. But you can actually take your money, whether you're going to make an investment and do it with somebody like us at Bell Capital, and we find the deals, fund the deals, manage the asset, manage the management company, and then sign on the debt, um, negotiate the deal, negotiate the terms, negotiate the interest, turn around later, and then refinance the property and then distribute you your money back. And oh, by the way, distribute you cash flow every month. Like, that's a business, that's a job. And if you already run a practice, or if you already run a business, or you're already a high paid, executive or employee or something at a company, you don't have time to have two jobs or two businesses running at the same time, right? But if you were to really take a look at it and you look at these deals, what are you looking for? You're looking for positive cash flow. You're looking for forced appreciation or controlled appreciation. Because, like I said, that was that example. If there was already going to be 5% on our money and we bought the property, and then over time, we can control by raising the income, treating the tenants good, giving them more amenities, making things nicer, making sure we get out any bad elements, or making sure the management company does that. We're going to increase rents and increase the income, and people are going to pay more money, and that brings the value of our property up. And oh, by the way, like I said, the tax benefits to our people, you as an investor or you as an entrepreneur finding this property yourself, and then naturally with good debt, good leverage, you can continue to own that asset while it cash flows, and you create generational wealth for you and your family. So that's what we do. And I know I went through that quick. I have a relatively small amount of time. I got to jump into something that we're doing here with major players, which is our interview with people who are playing a major game in their industry, whether they're capital raisers, whether they're asset managers, fund managers, syndicators, or whether they actually fund other businesses and companies and other people like myself. But anyways, I said all that to say, like, I get excited, I get off track, but this is so important. If you want to generate wealth for your family, you got to know where your money is. So one, you're either going to do deals, multifamily apartments is the better way to go for me when I think about real estate, or you're going to passively invest with somebody who knows this like the back of their hand. Um, If you want to join the club, just put in comments club and we'll send you over the information. You got to apply to join. It's a 12-month commitment being in our club so I can show you how to find the deals, how to underwrite the deals. That's back of napkin math. You can go deeper, but underwriting is not just numbers. Underwriting is looking at deals, talking to brokers. What do you even say to a broker to get them to call you back? How do you run these numbers and have conversations with brokers and show them that you know what you're talking about so they take you serious. So you get past that. Because the hardest part about doing deals in real estate is even getting a broker to call you back. That's just any business is getting someone to call you back that can control the future of your success in that business. And real estate is no different. So if you don't know what to say, how to say it, not sound like somebody who can't close a deal, they're not going to call you back. We go over all of that stuff in our real estate investor club. And I want to invite you to that. Or if you want to invest with us, you can go to bell-capital.com. Our site is under construction right now. We're making some adjustments to the site, making it better, more user friendly for you guys, bringing up some ways for you to invest with us. So, worst case, if you want to do something with us and you have interest, you can text the word info to 760-531 8500 760-531-8500, and someone on my team will get back with you, answer any questions you have about investing, find out what your situation is, what are you looking to do, and just give you information about us. You're welcome to do that. You got to be accredited, you got to have a good attitude, you got to be serious, and you got to be liquid. That's really the requirement that we're looking for people to invest. And if you want to learn more about how to multiply money, what you should be investing in, why I think multifamily is the real thing, why I believe you should have your family, you should know where your family's money is going to be 10, 20, 30, 40 years from now. It shouldn't be all over the place. You need one investment that works, not 20 investments that might work. That's a big difference. Don't gamble with your family's future. All right. That's good. I'm gonna start using that. Don't gamble with your family's future. Anyways, I appreciate you guys. If you have questions about this, this is truly how this works. You need to be focused on those four things because we do. Cash flow, appreciation, what is the tax benefits, and great leverage in an asset if you're going to do this yourself. Or if you're going to invest with us, just know that these are our investment priorities. I look at every deal and I base it off of this. Now, the real estate is one thing, but then the things as it relates to investing our investors' hard-earned money into a deal, I'm always going to weigh it up against these four metrics and these data points. And if they don't hit and we can't do it, I just pass, I say no, and I go on to the next deal. So I'm looking forward to seeing you guys. Like this video, share the video, comment on the video, give it a thumbs up or give it a thumbs down. Don't be a hater and a hider at the same time. I want all of it. If you have something stupid to say, put it in the comments, man. I love those. I read them. But if you don't have, like I'm here for you either way. But let me know if I can help. Let's get after it today, guys. Go. Boom.